Tracking insider buys is an important component whenever you're doing stock research. It provides a direct window into the convictions of the individuals most intimately acquainted with a company's operations. They see the day-to-day management, and if they're buying their stock aggressively with their own money, that means they have skin in the game. And as Peter Lynch famously noted, insiders will sell their shares for any number of reasons. Whether to buy a bigger home, a vacation home, or something else, there can be a lot of personal reasons for that. But an insider will only buy shares for one reason: they believe the stock will go up in value. This is actually a pretty popular investing strategy that some people have. They'll track large insider purchases and then they'll buy and sell stocks based upon their actions. Before I personally enter any new position, I'll look and see if insiders are currently buying or selling shares of their company. If I see a lot of insiders are selling large amounts, that usually convinces me not to buy a stock. If they're buying, then that'll give me more confidence. There's no guarantee that a stock will go up or do well after the CEO or board members buy shares, but we do have to believe that they believe that better times are ahead. So in today's video, we're going to look at several high-yielding dividend stocks that come with double-digit yields, and insiders have been buying their shares pretty aggressively for the past 2 months. The first one we'll look at is Aries Capital, ticker ARCC. In the past 2 months, 5 company insiders have bought shares of this business development company. We can see that their CEO bought almost $500,000 worth of his own stock back on February 9th. Also buying was their chief operating officer, buying roughly $288,000 worth of ARCC on the same day. Then we can also see that their CFO, as well as one company director, bought additional shares of the company as well. All of these stock purchases took place 5 days after Aries Capital released their full year 2025 results. Now, if you're a regular viewer of this channel, this company will not be a stranger to you. They're regarded as one of the safest companies in this sector, even as conditions continue to get difficult for these businesses. They're the biggest BDC in the sector and one of the oldest still in operation. 3 weeks ago, Aries Capital posted their latest financial results, which were better than what some people were anticipating. As lower interest rates have reduced investment income for BDCs, Aries Capital has done a great job in protecting their dividend. What I think was most important, though, wasn't in their operating results, it was in their earnings call. To quote their CEO, "Let me make some comments on our dividend outlook. We believe ARCC is in a good position to maintain its dividend despite market expectations for further declines in short-term interest rates. We generally set our dividend level based upon our view of our earnings power of our company. While lower short-term rates present an earnings headwind, we believe there are multiple factors that can support our earnings and thus our current dividend level for the foreseeable future. This has given investors confidence that they're extremely dedicated to maintaining their dividend, even if things get slightly worse. And they have the spillover on hand to carry their dividend if earnings don't support it for a period." This next company that insiders are buying aggressively is one that I really didn't see coming. TriplePoint Venture Growth, ticker TPVG, has been aggressively bought by many insiders over the past 2 months. Since last December, insiders have bought over $4 million worth of this company's stock. Their CEO accounted for about 1/4 of that, as records show that he bought on 6 different occasions. But buying even more aggressively than him is their chief investment officer, who bought millions of dollars worth of this company's stock since December 29th. TriplePoint Venture Growth is a stock that I used to hold many years ago, until things got extremely difficult for them following the pandemic. In the past 5 years, their stock has fallen by more than 64% in share price, and they've also gone through 2 dividend cuts. TriplePoint is a BDC that has a couple of unique distinctives. They invest in science and technology companies, much like Hercules Capital and Horizon Technology Finance. But they also invest in companies that are in a very specific category of the venture stage. Unlike some BDCs, they only invest in companies that have gone through several rounds of venture capital funding and are generating millions of dollars of profit annually already. They also have to be progressing towards going public, which would help them raise additional capital. That's their strategy, which unfortunately hasn't worked out too well for them in the past few years. So why are their CEO and CII buying shares of their stock so aggressively? We really don't know. It would seem to indicate that they know something we don't. Maybe they do have reason to believe that TriplePoint is going to turn things around very soon. I can't say that I'm tempted to buy TPVG stock though. MSC Income Fund, ticker MSIF, is another stock that's had some insider activity. Their CEO recently purchased 3,700 shares of his own company less than 2 months ago, increasing his ownership in the company by roughly 6.6%. MSC Income Fund might look familiar to you upon looking at their website. If it does, that's because this company's a subsidiary of Main Street Capital. MSIF went public back in January of 2025 after being a private BDC since its founding back in 2011. This was done in order to raise money to pay down debt as well as make new investments. Today, MSC is one of the smaller companies in the BDC sector, as they're currently ranked 23rd when it comes to market cap. Despite being an offshoot of Main Street Capital, MSC Income Fund doesn't look too much like Main Street. While they are the advisor to this company, MSIF looks more like your typical BDC. They hold an overwhelming amount of first lien floating rate debt, where Main Street Capital is well known for holding a lot more equity investments. This is why Main Street stock has historically come with a lower yield, but much better share price appreciation. MSIF's investment portfolio is overwhelmingly made up of first lien senior secured debt, so it looks more like Blackstone Secured Lending Fund or many other BDCs that currently exist. Because Main Street is the advisor to this company, I know there's a lot of people who want to believe that this company will also see the kind of returns that Main Street has delivered. But given the fact this company has only been around for about a year, and it did launch during a really difficult time, the jury is still out on how successful they'll be. Actually, Main Street Capital went public during a really difficult time as well, as they launched back in 2007. One way they are like Main Street is that they do pay a special dividend, which their advisor also does pretty often. They paid a supplemental dividend every quarter in 2025, although it is currently just a penny. In their most recent financial results, they reported earning 34 cents of net investment income, which isn't enough to cover their base dividend. Despite that, they still announced their regular 35-cent dividend as well as that 1-cent special dividend. They're choosing to maintain it, so they might have a lot of confidence that things won't get much worse. So that's a look at some high-yielding dividend stocks that insiders are loading up on. Let me know if you hold any of these stocks yourself and if you're confident about their futures. But with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.